Hello, good morning to you this Friday morning. My name is Ayodele-Bamisaiye. I'm reaching you from our offices here at Dexteritas Professional Corporation in Calgary, Alberta. And it's an awesome pleasure to be here to be able to share what I know and to speak about all things accounting, finance, entrepreneurship, business, and wealth building. I know that sounds like a mouthful, but all I'm simply saying is that I know that you go to a job to make money because you want to build wealth, and there's a path to do that. I'm an adventurer, I'm in that process myself, and this is my opportunity to just share what I know on an ongoing basis. Now, I always speak from my place as a CPA and an accountant serving clients here in the city of Calgary and across the rest of Canada. And it's from that I kind of always seem to focus on taxes. You know why? Because taxes are the single largest bill that you're going to pay for the rest of your life. Until your dying day, you're going to keep paying taxes. And when you're dead and gone, you're going to have somebody who's going to file that last final tax return on your behalf. That's just the way it goes on around here, and that's why I'm here this morning. The Real Moose. Hi, thanks for saying hello. I can see you on Instagram here, right? I really appreciate you stopping by and saying hi. I'm digitally waving, yeah. And to everybody else who's joining us on Facebook or LinkedIn or what's the third one or YouTube, thanks very much for watching. It's always a pleasure to be able to host these sessions. Just a couple things to bring to your attention. The Financial Empowerment Initiative, the FEI, continues to provide free tax filing services for people of modest income. So if your income is 50,000, your family income, not personal, family income. So if you're one person, that's your family. If there's more than one of you, then everybody's income put together is $50,000 or less, and you have not filed your historical tax returns, you can reach out, send an email to operations at the FEI. That's operations, one word with an S, at thefei.ca. And with that, you'll be able to book an appointment to have your tax returns filed. We have had clients that we've gone as far back as 10, 11, 12 years to get them caught up so that they can access government benefits. So don't be afraid of the number of years you may have outstanding. We are excited to support you, get you over the line, and get you on that path of living a life that you're happy with and you're satisfied with, able to access benefits from the government of Canada. So that's number one. Number two, to my friends at Startup Court, we had an intern join us sometime in the course of towards the end of last month, and he's been such an excellent ad. So a lot of all the stuff you're doing, you're seeing on social media is his handiwork. So thank you very much. I just wanted to shout him out this morning. Now, I also want to bring to our attention Founders Lounge. Founders Lounge is happening June 19 at the platform. We're going to have invites out shortly, and it promises to be a very interesting one. That's just a total different twist on something that we've done. Of course, there's going to be the networking, meeting people, catching up, having conversations, but much more than that, we're just going to be bringing to you, resources that can make a difference for you long term. So yeah, show up to that. Now, when the sign up link comes out and you get it, please do so. Lastly, a friend of mine is doing something very interesting in this tax space, and you can find it at taxcommunity.ca. If you have a minute, you can drop by there and just check it out. It's access to valuable information. The kind of thing I talk about here is what he wants to talk about there too. So if you have a minute, you can stop by at taxcommunity.ca, see what's up there, and see if that's for you. Sign up. There's opportunity to lock in some long-term discounts on that platform as it comes. So hey, that's all my PSAs for the morning. Quite a mouthful. What am I talking about this morning? The fact is this: If you have a plan for your taxes, you save on that bill, just like everything else. You know, when you want to go to the grocery store, if you go with a list, most likely you buy exactly what you want and you buy it for a reasonable price, compared to if you just take your credit card and show up there, you're most likely going to spend the money, and you may potentially spend money on stuff that you really do not want to. Yeah, yeah, yeah. I'm looking at you. I'm looking at you right there. So, hey, there's no reason why you shouldn't treat your taxes the same way. Let's talk about how we can save money when you have a plan for taxes. Now, what is a primary driver for your tax bill? The primary driver for your tax bill is residency in Canada, Canadian tax. Now, who's the resident? Is it you? Is it a corporation? Is it a trust? Is it a partnership? That legal structure is very, very, very important. And most people don't think about that. Just like, oh yeah, I have a job, I earn income, great, fantastic. Is there a way that you can put yourself in a position that leaves you with a smaller tax bill? Is there a way you can put yourself in a position that you end up with better cash flow? Those are all questions that we should be asking, because guess what? You work very hard for that money that you earn, right? You work very hard for it. So you don't want to just give it away. You know, you want to make sure that you're paying the right amount of taxes, and you want to make sure that you are deploying the capital that you have earned in a manner that gives you the best life possible. So tax planning helps you to put yourself in an optimal position for taxes. It helps you to avoid surprises. Yeah. One thing that I see is, you know, people, you prepare a tax return, you file it, and then suddenly there is a bonus slip that shows up, because guess what? The slip was filed late by the employer, and then there's a reassessment, and then there's an additional tax bill. If there's a plan, and we've talked about that bonus income, then there's a clear plan to address that, so there will be no surprises. A tax plan ensures that you avoid surprises, right? You're able to build wealth faster. What does that mean? Okay, so think about this. Every year, say you earn about $100,000, and every year you set up a plan that puts about $10,000 to $15,000 back in your pocket from your tax refund, in form of a tax refund. Now, if you have two people, one of them gets that refund, and he puts that refund and locks it up in a wealth building capital thing, either whether it's stocks, bonds, real estate, whatever. He just puts it away and makes it part of his portfolio. And you can imagine doing that over 10 years. That's between $100,000 and $150,000 carefully squirreled away that way. Now, if you look at that money, time value of money, say it's growing at a bit beyond inflation, maybe 5, 6, 7% per annum. Those numbers change very quickly, compared to somebody who gets that money, makes a plan, gets that refund, and does nothing about it, or doesn't even have a tax plan at all. So person A has created a war chest of in excess of $150,000 over 10 years, whereas person B still doesn't know where his money is going, right? So your tax plan is a critical part of your wealth building plan. But if you're not thinking about it, well, that's all the wealth you're talking about walking out the window. So you want to think about that. And of course, the more your wealth grows, right, the more you're able to put yourself in a position to keep more of your income. And that's what you want to do. So because of that, that's why I keep drawing attention to the fact that you need to have a plan for your taxes. Now, a few opportunities that I've seen in the past. Number one is the incorporation strategy. So you have a job, and then you're able to, from time to time, either you get projects on the side, or you choose to, execute work with clients who are out of the country, and they're fine working with you as a corporation. When you take that kind of money, say you're making $50,000, $60,000 in that kind of arrangement. If you take $50,000 in your personal capacity with no income at all, most likely you end up paying about somewhere between $5,000 and $8,000 in taxes, effective tax rate. Now, if you take that money into a corporation, right, you may find yourself paying about that or significantly less if you have your expenses clearly captured and recorded, and then based on that. And then, of course, your corporate tax rates are significantly lower, 15% at the highest compared to 15% at the lowest, right? So when you look at it from that perspective, you're able to say, okay, is there an opportunity for me to go corporate? Is there an opportunity for me to make this an incorporated business rather than a sole proprietorship? A sole proprietorship taxes the income in your personal name, whereas a corporation is a separate legal person. That could be the difference between $15, $20, $30,000 bill and a $10,000 tax bill. But you can only identify that difference if you think about it and have a plan for it. Another thing that I talked about last week, which I'm going to reiterate this week, is missed deductions. You bought a house, you didn't claim the home buyer's plan. Your children are in daycare, you forgot to get the slips from the childcare provider, so therefore you couldn't make the claim on your taxes. You made contributions to your RRSP, you don't have the slips, or for some reason you did not make the claim. Or the one that I hear the most, you made all these charitable donations and you're like, oh yeah, I gave the money to God, so therefore I'm not going to make the claim on my tax returns. Please don't do that to yourself. Please, please. God is happy for you to get the tax refund. He is, because he knows that if you get the tax refund, you still come back and pay the tithe of that refund again. So he wants you to get the tax refund for paying the tithe in the first place, right? So everything that impacts your life that has a tax implication, you need to be aware of it. And when you're aware of it, you are able to make a difference for yourself, right? So those are some of the things that we need. You need to be aware of the occurrences in your life that have a tax implication. There's a checklist I send out to my clients. I help them to say, okay, this happened, it has a tax implication. That happened, it has a tax implication. So that you are able to tell the things that have a tax implication for your life and properly address those implications as they are applicable to you. Now, please, when you get a raise, think about how that raise impacts your taxes. A raise means more income, which means more taxes. A bonus means more income, which means more taxes. How can you use a structure like RRSPs to manage that? Still got a call from a client asking, hey, how do I protect my coming bonus, right? And it was a simple answer: make an RRSP contribution. Then we had to do a deep dive. How much contribution room do you have? Is your employer matching your pension contributions? And all those are questions that are relevant because they help us to determine how much of that bonus can go into the RRSP contribution room, right? So think about as your income rises, think about the tools that you can use to manage your tax bill, because the government doesn't want you to pay out all your income in taxes. The government wants you to pay your fair share of taxes. Your structures determine what your fair share is. So, in wrapping up, tax planning is not about loopholes. Tax planning is not about avoiding taxes. Tax planning is about setting yourself up to be in the best position such that you keep the most possible for the money that you make. That hard-earned cash that comes to you, you keep the most possible, either as a result of structures in place to get a refund or proper capture of expenses to optimize what goes out. So without talking any further, I'm saying that's all I got this Friday morning. I'm enjoying the weather. Yes, I know I'm wearing a bomber jacket. It makes it look like it's cold, but it's not. The bomber jacket is just to keep the wind out. But apart from that, the sun is shining, and I'm a happy Calgarian today. It's an amazing Friday morning, heading into a great weekend. I wish you an excellent day. Have fun, and yeah, bye for now.